In today's video, I'm going to share with you one of the easiest moving average strategy that you can start using today to make profits in the market. See, I've been trading for a long time now and I've seen people using moving averages in different ways. And today I want to share with you my own way that I use the moving average and the strategy that I use to profit in the market trading using the moving average. Now, when you talk about the moving average, there's different things that you need to understand. For example, what is the moving average itself? Basically, the moving average is an indicator that is used to smooth out price over a certain period of time by creating an average of those prices. So I'm going to share with you what I mean by that. So if you look at this chart right here, you can see that there's different ways to analyze the market movement. But one of the ways that the moving average is used in a good way is that it smoothens out your trends, right? So you will just want to see the average price of a certain period of time so that you know if the market is in uptrend or in a downtrend. So for example, if the price is moving above the moving average and the moving average is following below the price, that means the market is in an uptrend. On the other side, if the market is moving and the price is below the moving average and at the same time the price is below the moving average and the moving average is above the price, that shows you that the market is in a downtrend. But this is different depending on which type of moving average are you using, right? So for example, I want to show you how to use the moving average correctly. So if you want to learn how to use moving averages correctly, just make sure you keep watching. But for now, just make sure you subscribe to the channel or leave a like if you are new to this video. If you are new to this channel, just leave a like or share or just support the channel by doing one of those things. Now let's move on to how to use the moving averages correctly. Now there's different ways of using the moving averages and I'm going to show you all those different ways, but I will show you also the strategy how I use it specifically using one of these moving averages, right? So the first moving average that I use is the 10 period moving average. And what is the 10 period moving averages for? So the 10 period moving averages can be used to find strong momentum in the market. If the market is moving above the 10 period moving average, that means it has high momentum. And let me show you what I mean by this. So if you look at this, you can see that when the market is moving above, so this line here, this black line is the moving average, right? So if the market is moving above the 10 period moving average, it simply means that the market have got high momentum and it's going to the upside. So most of the time you're going to see that if the market is above and all the candles are closing above the moving averages, and especially if the candles are opening and closing above this or below and not touching this 10 period moving average, there is very high momentum. Like for example, if you look at this candle right here, you can see there's high momentum at this point, and you can see all the candles that followed had high momentum and the market is moving very fast. There's no much reversals. You can see on all the cases where the market is moving above or below the 10 period moving average, there's high momentum in those trades, right? So if you want to trade based on momentum, it's one of the easiest way to see if the market have momentum, right? So the next way that you can use the moving average is the 20 period moving average. So the 20 period moving average is used to find short-term trends, right? So if you want to find short-term trends, you can use the 20 period moving averages, and this is what I mean by this, right? So if you open this chart right here, you're going to see that I've added another moving average, and this red line represents the 20 period moving average, right? Now, unlike the 10 period moving average, you can see that this line is a little bit far away from the price, right? But what this line does is that when the market crossed above here and moved all the way up to the way or up to when it crosses below the 20 period moving average, you can see that the market is in an uptrend. So if you want to know if the market is in an uptrend or not, just want to look at where the market is and is all the candles around that zone above the moving average. So what I would like to do is just to look at the past three candles and see if the past three candles are above the 20 period moving averages and there is no candle that is closing below the 20 period moving average. That simply means you are in an uptrend, right? So in this case, you can see from here, you would have seen the trend starting here when these three candles went above the 20 period moving averages. That means that the trend is going likely to the upside, right? And whenever the market is above the 20 period moving average, that simply means we are in an uptrend. And also that simply means that even if you are in a trade, we can feel free to let that trade run as long as the market is above the 20 period moving average, because we are still in the short term uptrend. I will show you the strategy in a minute, but before I do that, let's talk about the next moving average, which is the 50 period moving average. This is this moving average that I'm going to be showing you how to use my strategy using the 50 period moving average. So the 50 period moving average, I use it for dynamic support and resistance. So what I've seen is that most of the time when the market touches this peak, these moving averages, it often bounces on this, making it a support or resistance zone, or a dynamic support or resistance zone. So I've added the blue line here, which is the 50 period moving averages. Now, what we want to understand on these moving averages is that the market, when it's coming to zones, is not going to be going straight into the 50 period moving average directly, but it can go at least, it can leave a few pips above, or it can cross a little bit, but it's still the same zone where it is, right? So for example, if you look at this right here, you can see that the market touched the moving up the 50 period moving average here, and then it bounced, making this a strong level of support, right? And also we have another point here where the market touches and bounces, and another point right here where the market touches and bounces. Now, how do you know that the market is going to likely touch and bounce on this zone? But there's one mistake that you need to avoid, and I'm going to show you what that mistake is, right? But before I do that, let's talk about the last one, which is the 200 period moving average. And basically the 200 period moving average is the last line of defense, right? So it's the, you see the long term trend on that last line of defense, right? So if the market is above the 200 EMA, whatever you do, you are looking for buy positions, or you are analyzing it as an uptrend, right? And if it is below the 200 EMA, then you are analyzing it as a downtrend. So how do you trade these moving averages and create a profitable strategy? Now, you can create different strategies based on these moving averages, but in this video, I want to share with you how to use the 50 EMA to create a strategy with the 50 EMA. Now, the 50 EMA, what you want to understand is that the mistake that you need to avoid is you should never ever use the 50 EMA on its own to place your trades or to make your trading decisions. That is not going to work, because the 50 EMA, or the moving average, it's not a buy or sell signal. It's an indicator based on mathematical calculations, which helps you to analyze basically most of the time the trend and the strong zones in the market, but it's not a buy and sell signal. So how do you get your buy and sell signal? You need to add other confluences. And to add other confluences, I'm sure I'm going to show you in a minute what I mean by this, right? So let's talk about the 50 EMA trend strategy, right? Now, for the strategy, here's what you need to do. First of all, you are going to use two time frames for confirmation, right? The bigger time frame is the one that needs to have the 50 EMA on it, right? So first of all, in this example, we are going to go to the 4-hour time frame, right? Go to the 4-hour time frame and insert your 50 EMA. When you insert your 50 EMA, so what happens here when you put this moving average is that the market is going to be moving away from the moving average and then reversing back likely into the moving average. And when it comes into the moving average, this is when you want to be placing your trades. So in this case, my example is that we should have placed maybe a trade here, but in this case we are not using only the moving average. So you want to also combine other things, right? So first you want to see when the market pushes down and then it's reversing, you want to also draw areas of support and resistance. So what I mean is that if you see the market pushing to the downside like this and then reverses and then moves like this, right, we get the 1 2 3 move, right? So we get the impulsive move, pull back, impulsive move, and I always talk about this. And then when the market is coming back into this one, you want to mark this level or even this level. So if the moving average is here, so you want to mark this level and this level, and you want to see if these levels are going to give you any confluence with the moving average, right? So here's, and you want to pay attention here. This is what I mean by this. So in this case, you can see the market pushes down here, makes a pullback, pushes down again, is making a pullback, and this zone is the same zone that we have an area of value. So what do you do when this happens? The next thing that you want to do is you want to draw an area of support or resistance, right? So you want to draw this strong zone, and you want to see that if this zone is going to be near or is going to be very close, right? It doesn't need to touch always. Why? Because it's not going to be exactly the same. This is the biggest mistake that most people make. You are going to let a lot of trades go, or you are going to get into fake trades because you fear that the market you haven't touched. So all you want to do is you want to make sure that it's close enough to convince your own eyes that okay, this is the same zone right here. And when this happens, what is the next step that you want to do? You want to wait for the market to go to the downside on this zone. So how do you know? So here on this zone here, how do you know? How were you going to know that the market was going to push to the downside, right? So the easiest way that you could do is to use a trend line in this case, right? So if you draw a trend line right here, you're going to see that this trend line, you're going to see that this trend line is going to be touching this zone, this zone, this zone, this zone. So it touches four areas, and then it was finally broken right here, making this your good place to sell your trade. But I'm not going to sell right away because I don't know if I have high chances of selling here. So what do I need to do? I need to go down to the lower time frame to confirm this entry. So if I go down to the lower time frame, I'm just going to put another chart here, which is the 30-minute chart. So we started on the 4 hour. We have already seen our area of value. We have already seen our trend line, right? So we have a trend line here. So this is our area of value on the 4 hour time frame, and this is our area of value on the 30-minute time frame, and this is our trend line on the 4 hour time frame, and this is our trend line on the 30-minute time frame. When you see this, right, the next thing that we want to do is we just want to get another confirmation. Now, on this smaller time frame, the first confirmation that we can get right here is that we see the market breaking the trend line and also breaking below the moving average, right? So it's breaking below the 50 EMA on the 30-minute time frame, but the 50 EMA on the 4 hour time frame have rejected the market, and now it's breaking the 50 EMA on the 30-minute time frame. And also we can also add a trend line here. You can see a trend line here. You can see the market bounces on a trend line. It touches the trend line 3 times, and then it's dropping to the downside, right? And this will be your perfect zone to place your trade. So in this case, I would sell right here. I would sell here, right? So this will be your sell zone, and then you would put your stop loss above this zone. Now, your stop loss, do not put it in the zone or very close. Just find some gap right here so that if the market bounces here, you are going to get some time to be in the market, and then your take profit obviously needs to be bigger than your stop loss, maybe 2 times or 3 times bigger than your stop loss. So this is exactly how you place your trades, right? Now, here is another example, right? So firstly, you want to identify your 1, 2, 3 move, right? So your 1, 2, 3 move is something that is just, you see an impulsive move, a pullback, and another impulsive move, as simple as that, right? So in this case, which one is our 1, 2, 3 move, right? If we see here, you can see the market. So to get your 1, 2, 3 move, you just want to look at where your market is right now. You look back a few candles and you see if you can draw a 1, 2, 3 move, right? So in this case, here's my 1, 2, 3 move. You can see the first move here, a pullback, and another move right here. So we have a 1, 2, 3 move, and now we have the market is pushing back into the is now in a pullback right here. So we have a higher high, and the market is pushing, and now it's coming back into the moving averages, coming back into the moving averages. When it comes back into the moving averages, what is the next thing we do? The next thing we are going to do is to draw an area of value. So we want to see that if we draw a zone on this moving average where the market is touching, right? And if you look back, does this zone touch any of other points where it made a reversal, right? So in this case, we are here. We are not considering this because we are there, but we are considering this first touch, and then we are considering this second touch here, knowing that the market is this is a strong zone, and the market have been respecting this zone for a while now, right? So what do we do next is we draw our trend line, right? We draw our trend line to see if the market is going to break that trend line going to the above. So what makes me do this is simply that I know that if the market is pushing up here, and then when it's reversing, it's not going to be a straight line like this as I draw them, right? It's going, when the market is moving, it goes something like this, right? So it's going to be like this, and then on the reversal most of the time it's going to be something like this, right? They're going to be the candles are going to be looking like this. And if you, most of the time, if you draw a line, you can simply draw it can be either a trend line to the above, or if you want to make it a channel like this. In this case, this was the channel. You can see how what I mean by that, right? Hopefully that makes sense. And then we wait for the market to break that short-term trend line, right? We also have other strategies for trend line breaks. I did a video, I think, about that. Make sure you can check out the video here. But there is a trend line break strategy, but in this case, we are combining this trend line break with the power of the moving average and also the break and retest, which is the retest of this 1 2 3 move right here. And when this happens, the next thing that we want to do is we want to go to the lower time. So in this case, we started on the 30-minute time frame, and since we started on the 30 minutes time frame, this is our area of value. This is our trend line for the 30-minute time frame, and this is our area of value and the same trend line on the higher time, on the 5-minute time frame, right? So on the 5-minute time frame, the trend line is looking like this, right? Or it can look like this, right? It can also look like this. It can also look like this. Sorry, it can also look like this, something like this, right? But it's the same thing, right? This is the 5-minute time frame, and this is the 30-minute time frame. Now the 5-minute time frame is what confirms our entry, right? We have already seen the 1 2 3 move, the area of value of the moving average, the 50 EMA on the higher time frame. Now we are looking at the breakout of this trend line that we have already drawn on the higher time frame, right? And also on the lower time frame, you can see again, we can trade, we can get our signal when the market crosses above this same 50 EMA, but this is the 50 EMA for a smaller time frame, and the market is crossing above it, and it's now going maybe likely in an uptrend, right? And this is the same thing, and this is the same trade on the lower time frames. So what you would do here is simply that you would buy after the breakout and the crossover that you can see right here, and then you put your stop loss below the zone, right? So this stop loss is going to look bigger on the smaller time frame, and then you put our take profit above here. But if you go to the higher time frame, simply you are buying again here, and you are putting your stop loss here, and maybe you take profit here, and it's not a very big zone, but the case that this is a smaller time frame is going to look big, and then after this happens, the market will probably move to the upside, and you would never know what happens. That's why you need to use proper risk management. That's why you need to be able to backtest this strategy before you start using it. I have a lot of videos about that. I will leave a link in the description below. Now, the examples that I was showing you are the examples of using this moving average in a trend following strategy. But what about the trend reversal strategy, right? So when you are looking for trend reversal, you can use also the 50 EMA for trend reversals. And let me show you how do you do that. So this is an example. We have already put the 50 EMA, and then you can see whenever the market is above the 50 EMA, if it is above the 50 EMA, the market is going up. And whenever the market is below the 50 EMA, the market is going to the downside. And when it crosses again above the 50 EMA, the market is going to the upside, right? But how do we place our trades right here, right? So the first thing that we want to do is this, obviously the same thing, right? So obviously we want to see the market moving to the downside, right? Like this, the market is pushing to the downside, and then it goes up. When it goes up, right, how do you identify a trend reversals? I always talk about this. A trend reversal, you identify it whenever the market breaks a previous lower high or higher low. So for example, the market was moving like this, impulsive move, pullback, impulsive move, pullback, impulsive move, pullback, impulsive move, pullback, right? And then on this pullback, right? If the market kept going down here, we know that the market is likely continuing the downtrend, right? But in this case, the market went up and then it broke the 50 EMA. Not only that, right? It also broke above the previous higher low here, or lower high. What do you call it? Let me correct me in the comments, right? So it breaks there and then it pushes all the way up and it makes its first reversal. And where is this reversal come? To the 50 EMA. So when this happens, what do we do? This is the same thing that I was talking about. The next thing that you're gonna do, obviously, is to see on this zone. We just draw a zone on this zone and see if this zone is touching any other zone previously. So in this case, you could see that the market touches here, 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 and this zone is very strong. And also here you gave a touch right here. So the market have come into that zone and created a big wick right here. And when it does that, we draw our trend line. When we draw our trend line, we know that if the market breaks the trend line to the upside, then this. So if the market breaks our trend line here and bounces here, that simply means we have a high chances that this downtrend right here, if successfully reversed, and the market is gonna push to the upside, and we want to place our trades if that happens, right? So what do? We wait for the market to break here, and then we buy at this zone right here. So once our trend line is broken, so our trend line looked like this, and once it's broken and the market is touching the 50 EMA, we have also a strong zone here. We buy and expect prices to go to the upside. Now you will never know what happens, as I always say, but you need to backtest this strategy. You need to see how it works for yourself, right? So from this zone, so basically this is going to be the setup for your trade, right? You see the everything right here coming up, and then you buy and you see what happens. Now when this happens, sometimes you win, sometimes you lose, and in this case this was a good winning trade. But do not always rely on one or two trades when you are creating your strategy. You want to backtest this, you want to trade this for a longer period of time and see if it does work for you or not. Now, if you want to learn how to use MetaTrader from start to finish, make sure you check out this video appearing on the screen right now so that you can learn a complete step-by-step guide on how to use MetaTrader as a pro. Thank you for watching and see you in that video.